I think unfortunately it goes back to Steve's point, which is focus on the fundamentals. So UK assets look pretty well valued relative to anything else in Europe, the rest of the world. And because of that, you can buy some good businesses at some pretty good valuations, and that's what you should focus on. In our UK portfolios in the last sort of 6 to 12 months, we've done that. We managed to pick up a few of the more domestic companies that we think are fundamentally good business no matter what happens. And I think that's what investors should do. Trying to make a call on the UK per se, I think it's very difficult. Apart from anything else, the FTSE is so dominated by international businesses. Actually, if Brexit goes well, whatever that means, maybe the FTSE underperforms. I think we saw that earlier this week. There was a day when sterling was very strong. Actually, the FTSE was down, the mid-cap was up. So I think we need to be aware of that as well.
How critical is that correlation, though? Because at times it has broken down and people have been willing to own the UK market on its merits alone, regardless of what's happening with the pound.
I think it's less the pound, it's more just Brexit. When people have certainty, that whatever that is, that we know something's going to happen, whatever it may happen, then they can look at the stocks again, and sterling will be what sterling will be. You can then look through it and look at the fundamentals of the businesses. I think it's more about Brexit rather than sterling per se.
As I look at your positioning here, no big oil, no telcos, no utilities. Let's just deal with that. Why are you unattracted by those three sectors?
It's been consistent for a very long time. In fact, probably every time I come on, we have the same conversation. Big oil, fundamentally, we just don't think they're very good businesses. They have no long-term track record of generating consistent returns above cost of capital or consistent cash flow. And yes, they're being very disciplined at the moment in terms of not spending too much money, but we know they have to invest eventually because you have decline rates in oil. If you don't have new finds or make new acquisitions, production will fall eventually. And we think that will happen. Fundamentally, they're doing okay at the moment. We just think long-term, they're poor businesses. Utilities, in theory, they're in the UK very regulated, but we've seen every time there's a regulatory review, there's more challenges. We've seen that with both the water companies and the electricity companies. The Europeans tend to be very dominated by power prices, they're very leveraged. And telecoms, again, they're over-leveraged businesses. Every time there's a technology change, 3G, 4G, 5G, there's a great hope that they can suddenly develop pricing power. It never actually happens. And we saw some struggles with the European telecoms year to date so far. So it's just about, it's not saying we don't like these businesses, it's saying we just don't think they fit the criteria we're looking for.
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.